Welcome to Bitcoin Escape Plan. It may not look like it, but Bitcoin is fighting to maintain an uptrend at the moment, and we are very close to seeing that invalidated. In today's video, we will go over the exact levels that we need to see hold as support or resistance, and what that means moving forward with our overall thesis. Later on in the video, we will go over the higher timeframes that confirm or deny this confirmation trend that we are looking for. And then at the very end, I will check in on the local trades, though there's not really that much to update on that. If you like the content, go ahead and let YouTube know with a like, leave a question down below in the form of a comment, or make a remark if you have your own opinion about where you believe Bitcoin is about to head. And then as always, if you are completely new to the channel, you can go over to bitcoinescapeplan.com. Every Monday, I do release a full written breakdown of the price that goes over all of the time frames and just kind of helps you look at it briefly instead of listening to a long YouTube video that you can do in your own time. bitcoinescapeplan.com. Go check it out. All right, let's get into the video. 4-hour analysis, as always, is where we like to start off because that's going to tell us everything that we need to know about the local trend. Now, a couple very important things have happened. So this over here, this is our first major thing. We did talk about this, I believe, in Wednesday's video as something to look at. I was hoping at the time we would see strength there. We did not see strength there. Obviously, we then failed down below and got all the way back down to this blue trend line. That blue trend line is drawn from the 59.9K lows earlier this year in February. Very important. Now, I have redrawn this. I did not move it again. I'm fine with leaving it there for the moment because it's still giving us a lot of information, though technically the actual trend is slightly lower than that. It's technically down to here. That would actually form as an invalidation. But as you can see, the candles are closing very close to this. So I'm inclined to think it's still pretty important where it is, and I don't feel the need to move it at the moment. And then this other one is the one that, as you can see, we are really struggling with that at the moment. The 4-hour SMA itself, currently sitting at 70 or 67.4 rather, is forming as resistance. You can see we've had 3 failures of it in the last 2-3 days. Very important information for us. That is currently forming as resistance, and it's not helping with this trend line. This trend line is drawn from the first time we went back to 72 after that snap down to 59.9K. So this one has been invalidated as well, but again, I'm inclined to think it's still important, and the price is telling me that it is still important just by the amount of time that we are spending at it now. You can see it is really fighting to get through this level. So this is kind of what we're looking for in the short term, is if we continue to have breaks down here, and you can look at this as like a tightening of the range. I'll go over a little bit later on in the video about the higher time frame, what we're looking for between now and about April 20th, April 23rd. And as you can see, if we continue to have pressure on this uptrend blue trend line, it will eventually break to the downside. And we are about to get to a point where it's possible that this downtrend from that first 72K peak may start to form as significant resistance if we actually cannot get back above the 4-hour SMA, which, as you can see, is kind of somewhere between consolidating and slightly tilting up at the moment. Emphasis on slightly. You know, like that's not significant enough. We will have another 4-hour close in about an hour. So that will let us know if it goes up or if it starts trending downward. Currently, it looks like it's going to start trending downward again, which just puts pressure on this triangle for us to break to the downside, not for us to break to the upside, which obviously is not good. We do not want that. So this 67.6K pivot at the moment is kind of irrelevant. The price is showing enough volume in this Wednesday drop that we have not seen enough volume return with confidence yet to be able to break through that. And people are probably waiting, I think, until the weekly close to see how things shake out. And in the higher time frame, I will go over again that technically right now we are in an uptrend, even though it really does not look like it, you know, like, but technically from after the Sunday close, or this is actually right before the Sunday close. Technically from there, we are still in an uptrend, even though we have seen another failure and invalidation. The anchored volume profile is getting pretty full right here, we are seeing the most significant volume in this region that we have of any other time other than the point of control, which is back in 2022, 2023 at about 27.2K. Now, obviously, I don't think the price is going to jump down there, but that is the psychology of the most human beings that hold Bitcoin are in there. We are starting to really fill that out quite a bit in the region that we are in right now. And then, of course, to the upside, we have all of these individuals who bought from about 82 to 126. And we need all of those people not to panic while we stay in this range. The longer we stay in this range, the more time that those people have to sit in uncertainty and have to make good decisions instead of panic decisions. So the other two things that are most important for us at the moment are the middle band of what I call the Elder VWAP. Now this is just the anchored VWAP tool over here in your forecasting tools. But this one is drawn from 2011. It is an uptrend anchored VWAP that tells us everything that goes on with the price of Bitcoin between 2011 and now. Super important. I know other people, you can see in my course section, which I'll link here up in the top right hand corner. Other people will do it on more local trends, and that is very smart for trading. I like to use it this way so that I actually understand the broader trend of what is happening, not just what's going to happen in the next couple hours, but what is happening globally for the price. It functions very well for that. So this kind of acts as a magnet. As you can see, the price is still pretty magnetized towards it, but we are getting candle closes above it, even if we do get wicks below it. And that is about as bullish as we can get, quite frankly. Like if we were seeing these candles close slightly below that instead of above it, I would really be leaning towards the downside and I would be much more panicked about my current positions. But because we continue to get wicks down below it and the candles do everything in their power to still close significantly above it, and even in this case, to still close above this trend line for the most part, other than this guy, but again, this trend line could be slightly more accurate, so it's not the gospel. And then this other one that's important is the downtrend anchored VWAP. This one is drawn from the 126 all-time high in October of last year. And obviously, as you can see, this one is sharply dropping still. The middle band of the Elder VWAP has been pretty flat, like it's moved only by about $200 in the last couple months, whereas this downtrend anchored VWAP is just continuing to drop down. Apologies for the construction in the background if you can hear that. So the main thing that we're looking for at the moment is to see, when do these two cross? When are we going to get enough momentum from this downtrend anchor VWAP pushing down where it actually is going to interact with that middle band? And as I said, I'll talk slightly more about this on the longer time frame or the higher time frame, but this is what we're looking for right here. Is about April 23rd, April 24th. That's when we're going to see a cross of the downtrend from the 126 all-time high and the uptrend from the 59.9K bottom in February. And again, combined with that first trend line failure down here, we want to see price continue up here, and gradually we need to be forming support along this, or we can expect when we get here to see a more significant rejection and failure that is going to start pushing us significantly below this blue line. And that will tell us pretty clearly what we can expect with the general momentum of Bitcoin. So again, at the moment, the bottom band of the downtrend anchor VWAP is still sloping downwards. Our best case scenario, if we are able to reclaim it, is that we start heading in the direction of the middle band of the downtrend anchor VWAP, which is currently sitting at about 84K. However, it is my estimation, because we are still in a bear market, and don't listen to people who tell you the 4-year cycle is over. Those people are probably not even saying that anymore, even though they were saying it a ton last year, which is ridiculous. I think this is why I make a channel, is because I can't stand when people say stuff that is like clearly wrong, and I don't even understand like why they say it. Like, it's not like they get any brownie points for saying ridiculous shit. But we would still expect a failure. A general trend towards there, but a failure nonetheless, is what we would expect to see. And that goes for same thing for this guy. If we were to go towards the upper band of that, the upper band of that is about 95K, and we're just not going to see that. And there's multiple reasons why that is the case. Let's go take a look at them on the higher time frame. So on the higher time, what did I do? I didn't mean to zoom like that. Oh, God damn it. Hold on. Let me fix this. Hold for technical difficulties. Reset. There we go. So good at TradingView. I still did it. There we go. I kind of fixed it. So the main thing that we're looking for at the moment is right here. This is the monthly SMA. Now, historically speaking, it's about 90K. Historically speaking, we will not see a reclaim of the SMA on the monthly time frame any earlier than about 7 to 11 months total once we have broken it. We are on 1, 2, 3, 4, 5 months being below it, which means best case scenario is we would see another retest in about 2 to 3 months. And more likely, it's probably going to be closer to 4 to 6 months that we would actually see it. And still, in that instance, we're probably going to see a failure. Now, in this particular instance in 2022, it was closer to 11 months. And as you can see, we started to chop and we did break above it and then break back below it before we finally were able to break back above it really late in 2023. So this is a thing that people really need to wrap their heads around, is the bear market year is, rough the whole year. People just continue to get chopped out. And then the next year really is still kind of boring. It's a great time. It's a relatively safe time to dollar cost average. Like technically the safest time to dollar cost average is after, I would say, June, July of the bear market year. Typically we will have seen the majority of the drops back then. Like it would not have mattered if your cost basis was 22,000 instead of 15,000 in 2022. Like you would still be fucking stoked right now. There would be no reason at all for you to be butthurt about like, oh, my cost basis is 22,600. Like it doesn't matter, dude. You would be fine. So that's really what we need to keep in mind is we're not quite there yet. I do believe we have one more leg down, specifically in the direction of this 44K pivot. It's no guarantee that we see that. As you can see, the Bollinger Band on the monthly is still sloping upward. And I think that again will change if we see weakness at 64K. And really, like I said on all of my threads today, the thing that we really want to pay attention to is still if we can get a weekly close above 70.2K, which just does not look possible at the moment. This looks like a downtrend. This looks like pressure towards 64K. So since that is the case, we can assume that this weekly SMA is going to continue to drop downward until it eventually breaks the 76.2K pivot, meaning that by the time that we actually interact with that weekly SMA, it's going to be regarded as resistance instead of support. Now, what is my evidence for this? My evidence for this is if we go over to 2022, it's basically the same case. Now, does this look familiar? A breakdown in December into January. Now, for us in particular, we saw slightly the opposite. The breakdown was actually in November, a slight rise into December that culminated in a high in January, and then it continued to drop down. And really, we're just slightly inverse on 2022, but largely speaking, it's still the same trend where we were expecting either this local move up either in March or April. We obviously did not get that in March. We got a significant breakdown in March. So that's kind of what we're looking for now, and what we're expecting is, do we get this last break and ultimately resistance failure of the SMA and the localized Fibonacci pivot, which again for us is 76.2K. I originally, like I was saying in videos back in December, for anyone who's been following that long, I was really hoping this was going to be the 96K pivot we were going to experience this with, and that's just not the case at the moment. Unfortunately, we have to make do with reality. I don't have Fibonacci pivots for this time frame, but again, largely the same thing. We see a breakdown into March that culminates in a slight rise in April that once again regards in a failure of the weekly SMA. Then what happens in June, July? Another break and ultimate failure of the weekly SMA. So the monthly SMA, again, we've got several months before we can even see a break of it. That will likely result in a failure. I don't know why I keep saying regard. And this, again, 2018, who was the president in 2018? Donald J. Trump. So if anyone is brazen enough to run the exact same strategy, it is good old Mr. Marshmallow. That's what I'm expecting, is we're going to see this rise into tax season. We're going to see a failure at that point, and then head up one more time in July, and then continue dropping down for the rest of the year. Now, there are a number of reasons why I believe this, primarily based around the stable coins. I'm not going to talk about this in this video. I've talked about that in many, many other videos. But as far as I'm aware, based on how reality functions, the liquidity that people want to see for Bitcoin to go back to the moon does not enter the market until 2027, and it does not all enter the market on the same day in 2027. It will be over the course of the year that we start to see that liquidity come back in, and we are not going to see that while there is uncertainty in the Middle East, while oil prices are rising, while gold is in a slight pullback on its way to new all-time highs. It's not time for Bitcoin. Bitcoin, you're going to have to be patient. There's nothing wrong with this. That allows you to focus on generating income elsewhere and to continue to allocate to your position so that you will be rewarded on the back end. Now, you have to remember that historically speaking, if you are to buy during this time period, you will have to wait about 2 years before you are back in profit. And then even after that, there is still a short period of time where you will be in loss. And I emphasize short period of time. If you were to buy at the same region, you will have 2 years. So that means that from now until 2028, you can expect that it will either be chopping around your average cost or it will be below your average cost. And then there would be one other instance, and this would not be until whatever 2029, 2030, I guess, where it would slightly dip below it. And I actually am of the opinion that that is something that's probably going to break this time around, specifically because of this guy here. This is March of 2024. This is the first time in the history of Bitcoin that we saw a new all-time high in the halving year, in the first part of the halving year, technically before the halving itself. So this is mostly brought on by the ETF buyers. So this is a bulk of individuals who have high enough conviction to have exposure to Bitcoin, but low enough conviction where they don't want to handle it themselves. These are set it and forget it people. These are people who it's not going to be hard to convince them, oh, I should switch to the Solana ETF, or I should switch to the XRP ETF because those are going to go up way more than Bitcoin does. These are not individuals who are highly convicted in Bitcoin, and therefore it is easy to paper hand them. It is easy to convince them, I was wrong, I need to get out of it. And that will happen if we lose this 64K pivot. A lot of these people are going to have to make a hard decision at that point to either reallocate or to accept their loss before it becomes significant. And you really gotta hope that as we get down here to 44, that invalidates literally everyone who bought after February of 2024, which is the majority of people. You gotta remember that typically when these large financial institutions roll out these products, it's not like all of their customers buy on day one. It takes a period of 6 to 12 months for them really to get people onboarded. And that's what we're seeing at the moment is those people, we're gonna have to test their conviction. So broadly speaking, what we are expecting is one more rise and failure of the weekly SMA. Unfortunately, that looks lower and lower every day. It is currently sitting at 79.2K, now significantly below the 80K pivot that we were hoping we would rise to. And that's still, me personally, about the highest that I can see us rising. When we close the week on Sunday, and I will give a reminder of this on Sunday's video, and then I will give confirmation of this on Monday's video and the newsletter. So make sure, again, you are subscribed at Bitcoin Escape Plan so you do not miss that. I would imagine that this is going to drop, if not right to the 76.2K pivot, it's going to be just above it. And whichever one we hit first, one is going to be regarded as support and one is going to be regarded as resistance. And again, I believe that the result is the same way either way, where it just kind of influences how high it can go. Technically speaking, if we were to start closing above this Fibonacci pivot before this weekly SMA is actually down here, we could break it. And that's where we could see a move, from 80 to 84K-ish. However, with how low we are at the moment, if there's not a bunch of liquidity that's about to enter the market, which is highly unlikely on a Friday, as well as highly unlikely on a Saturday. Saturday is typically very boring, though not always. There have been a couple breaks of that recently where Saturday was actually a significant uptrend or a significant downtrend. But typically Saturday is pretty boring. and then we'll see a continuation of whatever the trend is on Sunday, which in this case for us is bullish at the moment. And it doesn't really seem like it, but technically that is bullish. like I hesitate to call it that. It's more like consolidation, but technically it is above where we closed last week, which is, again, we really want it to be back above about 70.2K, and that does not seem to be the case at the moment. But that is kind of the benchmark that we would like to see, just to be above the 50% mark of this range here. If we remain below the 50% mark of this range, where does that put pressure towards? That puts pressure towards 64K. The more times that we interact with the 64K pivot, the more likely we are to break below it. And as you can see at the moment, 76.2K is regarded as resistance, not support. So that's all the higher time frames. That's what we need to pay attention to. Nothing has really changed from the last couple of videos. Nothing will really change when I talk about it on Sunday or Monday's videos, just giving you an update. Let's go take a look at the 4-hour and the daily to see what has changed with the trading setups. Now, me personally, I'm a dumbass. I'm still in my long trade from here, which is not like, it's not based on the rule set that I have set. It's not based on the rule set that I'm using for other people that they are seeing profits with my strategy, which again, if you have questions about that, you can send me an email, you can send me a DM over on social media. The strategy as it stands is we wait for a 4-hour break of the Bollinger Band, either to the bottom or the top. To the top is going to tell us that's a clear short. To the bottom is going to tell us that is a clear uptrend. Now, the rule set for this for exits is actually more important than our entries. Our entries are typically pretty clear. Our exits, I think, are a combination of, this is not financial advice, but I think are a combination for me, statistically speaking. The price typically when it breaks the Bollinger Band, one side or the other, typically it will trend at least 1% in the opposite direction before potentially an invalidation or a continuation. Now what that means is I wouldn't set a hard stop loss at 1% for my take profit one, but I would kind of, if you're buying more than one contract, if you're buying multiple contracts, I would be comfortable with taking some off the table at about 1%, just because probabilistically speaking, the price will do that 80 to 90% of the time, where it will move about 1% and then it will move again, it'll either continue or it'll reverse from that. So it's just kind of a way to make sure you at least get paid on your position before continuing onward. And that is validated by most of these candle closes. This one would be, very tight. Like it's not, like that's just barely 1%, not even entirely 1%, depending on where you would have caught that. And you really would want to be closer down to here. But it would have been hard to tell for all of these because we've got candle closes that are right next to each other. And again, in this particular instance, oh my God, I hate you so much, Sticky Keys. This one, again, is like about 1%. So it's very normal, statistically speaking, for us to go about 1% in the opposite direction, depending on, again, where the break is. And sometimes you need to get out of that trade almost immediately. In this trade, you would have needed to get out of the long almost immediately. So it's not a hard and fast rule that, like, not all entries are created equally, essentially. But at the moment, we've seen a combination of, these are all shorts, obviously. You would be in profit on them at the moment, though not by a ton. You're starting to see consolidation there. And then technically, this is a long entry. This is not quite a long entry. This is technically a long entry, though I would categorize a wick outside of the Bollinger Band really more as like a silver star than a gold star in terms of an entry. And it's also, it would be hard to tell. Like you would have to be looking at the chart at the time to even realize, oh damn, we've wicked below it, and then you would need to catch it there very quickly. Sometimes I think it's acceptable to catch it once it's back inside. In this instance, again, slightly more than 1%. It's just a little bit less clear of an entry and closer to gambling than trading when you're doing that. We spend most of our time inside of the Bollinger Bands, which means that statistically speaking, those are not strong entry points. We spend much less time breaking or interacting with the Bollinger Bands in general, which is why I like to use those as potential entries. And then what I'm paying attention to for exits are interactions with either Fibonacci pivots or the SMA. Now, sometimes the SMA is going to fail and head back in the opposite direction. In this particular example, had you bought a short or had you bought a long here, technically you could have taken a profit once you got to the SMA and then left it. However, you also maybe would have made sense to close it there because we went to the opposite side of the Bollinger Band, which doesn't technically invalidate that this could go higher. However, it does indicate a short at that time. So it really depends on if you're trading both the futures contracts and the perpetuals contracts, or just if you're using a platform that allows you to trade isolated positions instead of combining your positions. I actually do like combining the positions because it allows you to be incorrect and still end up making money instead of only losing money, which I gotta be honest is great compared to option contracts or meme coins, where if you make the wrong decision about an entry or your expiration or your strike price or anything, you're kind of fucked. Like, you're basically going to lose your money. Whereas with the perpetual trades, it's a little bit more forgiving with that. So that's what we're looking for at the moment. Is we have seen now a couple short entries that may or may not be ready to close at the moment. Technically, that would again indicate that you could have closed it for a reversal. However, what we're really looking for again is what I talked about earlier in the video. We want to see that downtrend on the red trend line, and the overall we need to see if momentum is going to continue to break to the downside, or if we are going to get that slight trend up locally into August. Like I said, oh thank God I fixed it. That's kind of what we're looking for, is can we get it back above this, or are we just going to continue to break down? So that's pretty much it for this video. Like I said, I will give an update on this on Sunday's video. I will go into further detail about wherever the close is for the weekly SMA on Monday's video and in the newsletter. If you have any questions, please leave them down below. Any comments, any insights, I would love to hear them. In general, this platform is open for you guys to communicate with me, just the same as Threads is if you are following me from Threads, which again, thank you so much. You guys are the best. And subscribe if you are enjoying this content, if this is useful to you, if you are someone who is new to the channel. And really just in general, if you find this content helpful, please let other people know, because I'm currently stuck in 30 view jail and I would love to get out of 30 view jail. Yeah, that's pretty much it. Pay attention to that red downtrend line from 72K earlier in February. And until we see breaks back above that and closes back above the 4-hour SMA currently sitting at 67.4K, we are going to struggle. And it's pretty much the same thing on the daily time frame. We are still below that bottom band anchor VWAP. The daily SMA is still sloping downward, which is helpful for when we finally get an interaction with it, but it's probably going to be the same thing where we're able to break above that, and then we may see some resistance at that 70K pivot. And it is starting to look that way. It is starting to look like we may have got this may have been the expression that we were expecting to see in April. That may actually be regarded as another failure of the weekly SMA, even though again, we're so far away from it that I'm inclined to believe that we get one more retest of it. However, the price is not really speaking to that. The volume is just overwhelmingly bearish at the moment. And unless we see that flip, which I don't see happening with what's going on with oil in the Middle East, we may have to accept that that is going to be invalidated and that we are just going to continue to trend lower, which I know you don't want to hear, but like the video anyways. All right, I'll see you on Sunday. Have a great weekend, everybody.